Hey everyone, welcome back. Before we get started, don't forget to hit that like button and subscribe to the channel for more.
More insightful discussions.
Right. Today we're going to break down some interesting happenings in the financial markets.
Yeah.
The stock market's performance and how it's all tied up with things like tech advancements, inflation, and even what's going on around the world.
Yeah, it's quite a mix of factors at play right now.
Absolutely.
Take the S&P 500, for example. We're seeing an upward climb.
Yeah.
And a lot of that is fueled by the boost in tech stocks.
Speaking of tech, Nvidia,
Oh, yeah.
a real powerhouse in that sector, saw its stock price go up after Hewlett-Packard Enterprise
Wow.
launched their first Nvidia AI computing system.
Right.
This seems to show that there's a real hunger for AI-driven technology.
Exactly. What's interesting is that this positive movement comes even after some worries about glitches in their latest chip rollout. Seems like the market still has faith in their future, doesn't it?
It does. But there are other things impacting the market too,
Yeah.
right? We can't ignore the shadow of rising inflation. It's still a concern.
Yeah.
The Producer Price Index, or PPI, went up more than expected in January. This seems to be a sign that inflation is sticking around.
That's right. And this persistent inflation is making the Federal Reserve hesitant to pick back up on the rate cuts.
Right.
They put on hold last month. They're stressing that we need to see inflation clearly moving towards their 2% target before they consider lowering rates again.
It's a tough spot for the Fed, trying to control inflation, but also not wanting to stifle economic growth.
Right.
And speaking of inflation, we've seen former President Trump come out saying he would address high inflation, putting the blame on the current administration.
Yes, but there are experts pointing out that his suggestion of trade tariffs could actually make inflation worse in the coming months. These tariffs would end up being paid by U.S. importers, adding to their costs. And this is especially relevant considering the recent 25% tariff on steel and aluminum imports.
Wow.
And the possibility of similar tariffs on goods from other major trading partners.
So how about the companies themselves? This earnings season seems to have been generally positive, with a good chunk of the S&P 500 companies beating Wall Street's expectations. What are some of the standouts?
Well, Cisco Systems has raised their annual revenue guidance.
Okay.
They're anticipating strong demand for their cloud networking gear, especially with this rise in artificial intelligence.
Interesting.
Then there's Robinhood Markets, the cryptocurrency trading platform.
Right.
They're celebrating record revenue and profit in the fourth quarter. Looks like retail trading is making a comeback. And Dutch Bros, the coffee chain, they also exceeded expectations.
Okay.
With strong earnings and same-store sales.
And we can't leave out Crocs. Their stock value really shot up thanks to better than expected income in the fourth quarter.
Wow.
Driven by strong demand here in North America, and also their growing popularity in China. Seems like comfort is king, at least when it comes to footwear.
Indeed, but as you might expect, not every company is having such a smooth ride.
Right.
Reddit, for example, saw its daily active unique visitors drop below what was expected in the fourth quarter. Their CEO pointed to changes in Google's search algorithm that impacted user traffic to their platform.
Deere & Company, the agricultural equipment manufacturer, also hit a snag.
Oh.
They reported a big drop in net income during their fiscal first quarter. It seems like they're dealing with inventory challenges and just general uncertainty in the market.
It just goes to show that even while some sectors are doing great, others are running into obstacles in the current economic climate. Now, on a slightly different note, let's look at what's happening globally, specifically the situation between Russia and Ukraine.
Yeah.
There's a sliver of hope peeking through with the potential for peace talks.
Yes, it seems these talks, which came about after conversations between former President Trump and the leaders of both Russia and Ukraine, have brought a bit of optimism to the markets.
This potential for peace comes after Ukraine signaled that they might be willing to back away from their pursuit of NATO membership, which was a major sticking point for Russia.
Okay.
Analysts are even suggesting that the rebuilding efforts in Ukraine, estimated to cost close to $500 billion, could significantly boost demand for commodities like steel and cement. This could have a big impact on how the market moves.
It's certainly a situation with a lot of moving parts and potential to impact various industries and markets worldwide.
It will be interesting to see how those peace talks progress and what the ultimate impact on the economic landscape will be. Shifting back to the U.S. market, there are a few other companies worth highlighting.
Here, who's got your eye?
Airbnb is one. They posted strong earnings for the quarter, exceeding what analysts were expecting.
It seems like they're benefiting from the travel rebound that's been happening. People are ready to get out and about again.
Absolutely. And Airbnb has been smart about expanding what they offer, particularly for long-term stays and unique experiences. They're tapping into those changing travel trends.
Speaking of adapting, what about Coinbase Global? They're a major player in the world world of cryptocurrency. How are they doing?
Coinbase also reported positive earnings, though they did acknowledge that the crypto market is still pretty volatile. But their results seem to show that even with the ups and downs, interest in digital assets is growing.
Cryptocurrencies have certainly been a roller coaster ride, but there are clearly still a lot of investors and traders in that space. What other companies are we looking at today?
Well, Palo Alto Networks, a leader in cybersecurity, reported solid earnings and revenue growth. That's been driven by the increasing need for their security solutions.
Cybersecurity is a big concern for companies of all sizes these days, and it seems like Palo Alto Networks is in a good position to capitalize on that growing market.
For sure. Cyber threats are becoming more and more sophisticated, so companies are putting a lot of resources into protecting their data and systems.
And speaking of investing, Robinhood Markets' performance gives us some insight into the mindset of retail investors. Their record revenue and profit indicates that individual investors are actively participating in the market.
That's a trend worth noting, especially considering how much volatility we've seen in recent years. It seems like retail investors are becoming more comfortable with the ups and downs.
Maybe they're learning from experience and starting to think more long-term when it comes to their investments. How about the companies that cater more directly to consumers? What are we seeing there?
Well, Dutch Bros has been doing remarkably well. They're seeing strong earnings and same-store sales growth.
They seem to have found a recipe for success with their unique brand, their loyal customer base, and their expansion into new markets.
They've definitely carved out a niche for themselves in the competitive coffee market.
And then there's Crocs, the company that defied expectations with their comfy and colorful clogs.
The demand for Crocs is still strong, especially in North America and China, and that's what's been driving their impressive stock performance.
It's proof that a brand that truly connects with consumers and offers a product they want can be incredibly successful. But let's not forget that not every company is seeing such rosy results. Reddit, for instance, experienced that decline in daily active unique visitors.
Right, and their CEO attributed that to the changes in Google's search algorithm. Those changes really impacted the traffic to their platform.
It shows how important it is for companies to adapt to the constantly evolving digital landscape and how much influence search engines have on online visibility.
Exactly. And we also saw Deere & Company report a drop in net income.
It seems like they're dealing with challenges related to managing their inventory as well as those broader market uncertainties. It's all impacting their profitability.
It's a good reminder that even well-established companies in industries that are essential can face headwinds when the economic environment is uncertain.
So let's zoom out a bit and look at the overall macroeconomic picture. What are the key factors at play right now?
Well, inflation is still a major concern. It remains stubbornly high.
And that recent producer price index report showed us that those inflationary pressures are still present in the economy, which is why the Federal Reserve is hesitant to jump back into rate cuts.
They're in a tricky spot trying to keep inflation in check without stifling economic growth.
Right. And we also have to factor in the potential impact of former President Trump's proposed trade tariffs.
Experts have pointed out that those tariffs, which would be borne by U.S. importers, could further fuel inflation in the coming months.
It's a complex issue with potential repercussions across various sectors of the economy. Now, shifting gears to global events and their potential market impact, we've been talking about the possibility of those peace talks between Russia and Ukraine.
And that potential for peace has certainly brought some optimism to the markets.
Especially after Ukraine signaled a willingness to step back from pursuing NATO membership, which had been a major point of contention with Russia.
Analysts are now predicting that rebuilding efforts in Ukraine, estimated to cost nearly $500 billion, could significantly boost demand for commodities like steel and cement.
This could have a ripple effect on global markets, particularly for industries involved in construction and infrastructure development.
It's a situation that bears close watching as it unfolds. The outcome of those peace talks and the subsequent rebuilding efforts could have a significant impact on the global economic landscape.
It feels like we're in a time of major change and uncertainty, both here in the U.S. and globally.
That's a sharp observation. As we've seen, technological advancements, inflation, political decisions, and geopolitical events are all converging to create a very complex and dynamic market environment.
So how do we navigate all of this? It seems like you need to be able to analyze carefully and be ready to adapt as things shift.
Exactly. It's crucial to stay on top of the latest developments, consider different perspectives, and really evaluate the potential risks and opportunities as they emerge.
We've covered a lot of ground today, from individual company performance to those bigger economic indicators and global events. What are your key takeaways from our conversation? What should our listeners be thinking about?
I think one of the most important things to note is the resilience and adaptability of the market. Even with challenges challenges like inflation and geopolitical uncertainty, we see companies innovating, investors looking for opportunities, and global leaders trying to find solutions.
It's encouraging to see that drive to move forward, even amidst all the uncertainty.
It really is, and it highlights how important it is to stay engaged, informed, and prepared to adjust strategies as the landscape evolves.
Well said. We hope this discussion has given you some valuable insights and a better understanding of the forces shaping the financial markets today. Stay curious, stay informed, and we'll see you next time for another insightful discussion.